Hello everyone, this is Andrew McNair from SWAN Capital with our informational economic update for April 2019. In this month's video, I want to discuss some major headlines that influence markets in March, and I'll also provide you some insight into what these developments could mean for you as an investor. Now, as always, please stay tuned at the end of this video for some required disclosure statements. The first quarter of 2019 is behind us, and major domestic indexes here have posted a very strong performance so far for the year. Between January and March, the S&P 500 gained 13%, its best first quarter since 1998. The Dow and the NASDAQ also posted double-digit increases during that time. While all these three indexes were up in March, their monthly gains were actually relatively small. The S&P 500 added only 1.8%, and the Dow hung on at 0.1%, and the NASDAQ at 2.6%. So questions have been circling about the strength of global and domestic growth here in the market. And as we've seen in the market here domestically, we had plenty of things to consider, good news and some bad news. The final reading of GDP, gross domestic product, came in lower than we expected. Despite this downward revision, GDP or gross domestic product was up for 2018 at 2.9%. However, the fourth quarter's slower pace reflected that concerns about corporate tax cuts may be starting to wane. We also saw worries play out as treasury yields fell and the yield curve inverted. And a lot of times investors don't know what that necessarily means. What it means is short-term treasury bills exceeded 10-year treasury bonds. So it was better to buy a short-term treasury bill than a long-term bond. And this type of inversion hasn't happened since 2007. And some investors believe this is a sign that it could mean that the economic slowdown is on the horizon. During the March meeting, though, that the FOMC, the Federal Reserve, confirmed that the economic activity growth is finally starting to slow. The Fed chose not to raise rates and removed any rate increase predictions for 2019. So Jerome Powell has slowed down the rate increases, but he still says that the fundamentals economically in the labor market still remain strong. So that's the good news. On the international front, if we go over to Europe, the European Central Bank, the ECB, cut the estimate for 2029 economic growth to 1.1% and announced actually a new stimulus program. These updates contributed to market uncertainty, especially as Canada and Australia appear to have slowing economies. And Wall Street took this news very bitterly. And after several days of losses in the market, it finally started to come around. In addition, the ongoing question of what will happen with Brexit continued to play out in the background of the markets throughout the month. So although markets may be experiencing a lot of uncertainty globally, here domestically, all the news wasn't so negative in March. See, in the US, the latest data showed that modest gains in our personal income as consumers, new home sales, and consumer sentiment were all high, meaning everyone feels really good about the economy. Also, apparent progress in the trade talks between China and the US has led markets to end on a high note. So that is some really good news to ponder. But as you can see, there's a lot of moving parts and really big difference in perspectives among investors right now. And we are going to continue monitoring these developments in April and try to determine what may lie ahead for economic growth, both here in the US and abroad. So that's it for this month's informational economic update. Once again, this is Andrew McNair with SWAN Capital signing off for the month of April 2019.